Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
Boom,
Hi.
we're on. Yeah, what a
Again.
great taste.
Yeah, isn't it great when you get into the office and the market is doing well? So many times I've come in and I'm like, oh God, not another one of these days. We're getting somewhere in the market right now. I'm hoping it lasts. But you and I were both just talking before we got this started that there's a bit of a rally in the bond market, which is good for interest rates.
There is. And I don't know how quick we're going to feel it, right? But you think we're going to start feeling it today, this week? What?
We're going to feel it right now because you're up 19 basis points, almost 20 basis points. So that means that's about $200 less in closing costs per $100,000.
Wow.
You're making a difference. You're making a difference a little bit at a time here, and I'm liking it a lot. So things are improving quite a bit. As we can see the charts here, look at this. So look where we started today. This was Friday, and it's been a little rocky up and down, right? But this is where we're really trying to get back to about this point. But look at, if we can pierce this ceiling of resistance right here, I think we're on our way. So all we got to do is figure out what we can do to stop maybe bombing. Maybe that would be good.
That would be nice. Yeah. So when I look at that chart back in February, that's when we actually dipped below 6% on the mortgage market, right?
That's right. So we were up here. This was your 599 for about a day or two.
We dipped for a day. Yeah, I know. I remember. Yep.
But you know what? Well, we can get back there. We're going to be in good shape. I think even if we can get to here, we can keep in the lower sixes. So that's a real plus for us.
Yeah, I got to tell you, I think everybody's getting used to the interest rates being where they are. They don't like it when they go up to 6.7, 6.7, 6.9. They don't like that too much, but 6.5, people are just like, yeah, whatever. We're kind of
getting a lot more used to it than they were. That's for sure.
They are. And of course, we'd all love to see a little bit lower rate, but at the same time, we all know, you and I both, we talk about this all the time. When rates dip below 6%, the market is going to accelerate.
It explode. Yep.
It is. And I'm still having a great year. I've got 3 closing this week, right? So it's going to be a great week for me. And all my listings are still getting tons of people coming through them, right? And
what do you attribute that success for? For all the agents that may be listening to us that are like, man, what are these guys doing? What is it that you do to help yourself create success?
Yeah, honestly, it's consistency and it's longevity. I've been doing this about a dozen years, and I get a lot of referral business from former clients, but I'm consistently reaching out to people, consistently talking to people, consistently checking in on people and seeing how things are going. And it's something one of my mentors told me, it's a belly to belly business, right? You've got to get out there and meet people, talk to people, shake hands.
Not an internet business, so to speak. You got to make relationships.
I meet people on the internet all the time, but I got to tell you, the people that I meet in person work out a whole lot better.
Well, and the people on the internet, if you can convert them to a Zoom or a personal meeting, it solidifies it so much better. But I think for people listening out there that may be mortgage lenders or real estate agents, we are consistent about what we do. We're genuine about who we are, which took some work for us. Okay. But we're genuine about who we are. And we truly are there to help people find their way. But we are out there all the time doing things to keep ourselves in front of people. And if you're trying to experience success and you're being a secret agent, waiting for the mailman or the internet man to bring you a deal, it's not going to happen so easy. Even if you want social media or internet business, you got to work it, and you got to work it hard. Would you agree with that?
Absolutely. And I'm thinking as you're talking about that, I'm thinking about the 3 transactions that I have closing this week are all from referrals from former customers.
Right.
Everyone, all 3, right? All 3 of them. Yeah.
That tells you something for folks that are listening to this. You've got to stay in touch with those past clients. I'm flying to Vegas for the weekend, and I'm going to be working on my top 400 VIP clients. Now, why do you think I segregated 400 clients out of my tens of thousands of database? Why do you think I do that? Because
400, that's a lot of people.
because it's manageable. I can
Yeah.
still do mail outs. I can be personal. I can stay in touch with 400 people. You can't stay in touch with more than 400 people, not and have any type of personal interaction. So
Correct.
I think that you got to really develop a way to stay in touch with people and do things for them that are non-gratuitous, such as helping them with something. You help people with finding people for, you got a roof repair, you need a handyman, you need drywall work, you need whatever it is. We're connectors when it comes to that. Speaking of connectors, I am going to be doing a private class. It was designed to help some young folks that want to become homeowners, but I've invited move up buyers and investors to a real estate class that I'm doing Tuesday night, 6 p.m. Zoom meeting. Now, this is just to help walk you through the process so that you are not getting fed the fake news that tells you that houses are unaffordable, that you can't buy them. I'm going to show you there's not going to be an excuse that you're going to have after this class. So if you really don't know how to buy a
How
home,
do I get to this class, Bruce?
you go to webringyouhome.com, webringyouhome.com. It'll be on this. I'll show you everything you need to be able to connect, and we will get you into that class. And then if you're a real estate agent, we're also doing a class on June the 24th, and that is going to be on non-QM products. So asset depletion, DSCRs, bank statement programs for self-employed people, all kinds of things. So you won't want to miss these. All of these can be found at webringyouhome.com. And I'll have that up on the screen here so that you know how to get in. If you got young folks in the 20s and 30s that haven't bought a home yet, get them into my class Tuesday night. It's short. It's going to be 45 minutes out of your life that's going to change your life forever. I guarantee you. I'm going to drill down on all the things that you need to know. webringyouhome.com. What do you got going on that people need to know about?
Bruce, what I've got going on is I'm helping a lot of people find the right home, helping them get into the right home, helping them get qualified, helping people fix their credit or get things straight so they can be ready to buy a home. I'm working with a lot of people on that, and it's been an exciting time. It's been an exciting year, and I'm looking forward to helping my fair share of people.
You do that a lot. You also are helping all of us with at Florida Real Estate Insider, which is a YouTube channel that you have done extensive homework interviews on for the property tax relief, for your homestead property tax relief. Can you give us a little bit of an insight as to where things are right now?
Yeah, absolutely. I'm happy to do that. So yeah, it's been a really exciting topic. So where we are right now is we went through a whole session in the Florida legislature where they talked about a lot of stuff and didn't do anything. And DeSantis forced them in June into a special session. And the cool thing in Florida about a special session is the legislature can't decide to talk about anything other than what is dedicated on the special session. So they couldn't start talking about some other stuff and say, oh, we don't have time to get to that, right? So they actually came up with a plan. The plan is far from perfect. I don't even know if I like it or don't like it. What I like is that they did something, right? There's something that's going to show up on the ballot. So what's going to show up on the ballot is exactly this. We're going to vote in November. If it passes by 60%, because that's what it needs to pass an amendment, then in 2027, our exemption for non-school taxes, not the school taxes, they're not touched, but our exemption for the non-school goes up to 150K, right? So right now it's 50, it goes up to 150. And then in 2028, it goes up to 250. Okay. Now, here's my favorite part about this, because those are cool, right? That's awesome. But they also did something really smart in this. In the future, from 2029 on, it's indexed to inflation. So it's not 250,000. And then 20 years later, it's still 250,000, like the last time they did it, right? because I think it was about 20 years ago that they raised it to 50K. So it's going to go up, and then it's indexed to inflation. So every year it's going to go up 2, 3, 4%, whatever inflation is, 9 if we get the wrong people in office, right? It's going to be indexed to inflation and just keep going up, which kind of keeps homestead people at least a little flat on what they're going to be paying. They're not going to just keep going up tremendously, right?
You had some reservations about this one.
I do.
At the end of the day, if you could reduce your taxes by 35 to 45%, I would do that. Now, the thing that I have to be cautious of is what other impacts, negative impacts, could that cause me? Could that truly cause for my fire department to not have enough funding, for the police department to not have enough funding?
No.
And I think, Tom, that's the thing that gets in people's mind. And I was listening to the news before I came in this morning, and they're doing a whole article on these counties that are going, we're not going to have enough money to fund this, and we're not going to have enough money to fund that. But I don't know if that's true or just a lot of whining going on because they've been overspending our money to begin with.
It's both at the same time, right? So I haven't dug into every county. There's 67 counties. There's over 400 cities in the state. I'm one dude. I can't dig into them all, right? I already started digging really deep into Orange County because Orange County on the surface sounds incredible. It has an $8 billion budget, right? And you're like, oh my gosh, $8 billion, right? And then you look at how much of it is homestead property taxes. It's only $400 million, right? So it's 5% of the total budget. But when you break it down, the way that the county governments work is a lot of the money is earmarked. It's in specific buckets, right? So money that comes in from tourism tax needs to be spent within tourism. The convention center is an entity all in of itself. It doesn't create revenue that goes into the general fund. It creates revenue that stays within the tourism district, right? So, so when you break it down, all property taxes is only $1.7 billion. Now, again, that's a lot of money, right? But it funds a lot of stuff. So when you really dig into it, there may or may not be enough, and I haven't gotten all the way through my analysis yet, waste, fraud, and abuse, which we know there's always some, right? We don't know if there's enough to cut it and not impact services. So what we all expect, what a lot of people expect is that we're going to see these cities and counties, especially the rural counties, right? We're going to see them, they're going to take a big hit on their general funds, and they're likely to start shifting to fees. Now, the downside of fees is that they're not subject to your exemption. So if your county decides, hey, we're going to create a fire fee and everybody's going to pay $300, everybody pay $300, no exemptions, no exceptions, right? And so the impact may be for some lower value properties where, hey, my taxes went away. I don't pay the $2,500 a year of non-school that I was paying, but they might see $2,000 worth of fees. Okay, they saved some money, right? But then you look at your 100% disabled veterans, right? They pay no ad valorem taxes at all, school and non-school. Right. They pay fees, right? They pay their garbage fees, their water fees, anything that's in there. What happens if those become $1,000 fees, right? These veterans that we gave this great benefit to lose it, right? So there's a lot of like secondary effects that are bad.
There always is.
But I think there's some that are good. And here's the one good one that I figured out is that when this happens, I hope it happens, when it happens, people are going to have to get way more involved in their local government. When we see them send out the trim notice and say, hey, we're thinking about raising the fire fee to X, we need to get in there and say, why? Well, why can't you find the money somewhere else? Why can't you dig in and do this? I think there's a little too much apathy in the country about local government. I get it. We all don't have time to dig into the government.
And the average person, the average responsible person does not want the police or fire department to suffer one bit when it comes to none of us want that. However, I do believe this much. I guarantee you, if I went through my family budget, I'm sure I could find a few things to trim off of it. And I know if I could,
absolutely,
that the counties could. I know they can. And that's our hard-earned money. And I think people forget about that. You know what I mean? I think they forget.
I know they do. I know that when the counties are doing a really good job Yeah, the counties are doing a real good job of scare tactics. I actually had somebody come in and comment that he was a city commissioner. And his thing is, if this happens immediately, we're going to have to shut down all the libraries and the kill shelter or the animal shelters. And I was like, so how come your first instinct, I literally said this to the guy, how come your first instinct is you need to close down the libraries and kill kittens? And it's like, they didn't say, hey, we're going to have to look at our budget and maybe find some, no, we're right to, where to kill kittens. I was like, dude, come on, let's find the waste, right? If there's some there, let's get rid of it. If we need to change things a little bit, I'm okay with a slight millage increase, right? And that's the one thing that I think most of them can do that would help the lower income, the lower value property folks and shift a little bit of the revenue towards the higher earners is change the millage rates, right? They don't have to change it a lot.
I think we need to do a 1%. I think we should do a 1% sales tax.
I think that's another thing. And so I'm going to be digging into this. I got a lot of work that I've done. I've got a lot of work that I have to do. I'm going to come up with ideas, and I'm sending my stuff, by the way, all the time to Blaze and Goglia to try to get his attention on this, because he's out there knocking it around in the state, and I'm trying to help him out.
Good. We'll see if we can get an interview with him. In the meantime, check out @Florida Real Estate Insider, @Florida Real Estate Insider. And Tom's got everything you need to know about this, and continuing to do his
and insurance,
on a
by the way.
regular
I've got a
basis.
great video on how insurance is being lowered right now. And everybody that doubts me and says that I'm wrong, go get your insurance checked out, because I guarantee you, I just got a call 2 weeks ago and saved $2,800 a year on my car insurance.
Yep. It can be done. It can be done. They're bringing in a lot. We've got an interview that we're going to be putting on our YouTube channel here in the next couple of weeks with the Florida Insurance Commissioner, Michael Yorowski.
Good.
Yeah. Yeah. Really good dude. Hey, listen, we got to run. Happy Monday to you, and congratulations. I love to see the bond market rally, and let's see if we can keep it going.
Let's do it.
Have a good one.